Hello and welcome to Farm Journal Live. I'm editor Clinton Griffiths from our newsroom here in northern Indiana as we bring you the latest on what's happening across the agricultural industry, including what's going on with the coronavirus and the impact to our commodities and our markets out there. We're going to start with an update on some of the financial aspects, including the latest Rural Mainstreet Index compiled by Creighton University and Ernie Goss. It went up in June, but it's still well below growth neutral. The June reading sitting just below 38. Remember, 50 represents growth neutral. While still negative, it is well above a reading of around 12 in April. The survey found more than 3/4 of rural bankers within 10 rural states now report an economic downturn. Let's go ahead and bring in Dr. Ernie Goss with Creighton University to talk about the Rural Mainstreet Index. And Dr. Goss, this is it has been an interesting survey the last couple of months given the coronavirus, the pandemic, and the way that it's impacted our economic numbers.
You're right, Clinton. It was, as the Chinese proverb says, may you live in interesting times. These are the most interesting times. And as you indicated, I guess to sum it up, it was the negatives are getting less and negative.
Okay.
And certainly the $16 billion federal support program from USDA that has begun didn't hurt. And I think that'll improve things a bit more in the weeks and months ahead.
How negative or pessimistic were the rural bankers that you surveyed about the overall rural economy right now?
Well, it's still below growth neutral, but you compare it back to April and what we saw in April and May, much better than that. But we're still, it's hard to get very optimistic when you see commodity prices where they are. And that's both grain and livestock. And we asked the bankers about what the biggest challenge to their bank going forward was, and about 1/3 said the biggest challenge was low agricultural commodity prices. Until we see a rebound in the global economy with exports increasing significantly, we're going to still see some issues out there in the agricultural economy across the nation.
Let's talk about some of the things that you break down in this survey. Obviously, you ask about a bunch of different factors that play into the overall ag economy. One of those being ethanol. We saw some interesting responses there as far as how much the plants are running right now.
Yeah, interesting for perhaps we academics, but not interesting to the ethanol producers. Certainly, that's not well. I'll let them choose their words.
Right.
1/3 of the bankers reported that the ethanol plants in their area, those that had ethanol plants, 1/3 said they were temporarily or permanently closed. And those numbers match up with other numbers we're seeing for the Renewable Fuels Association, other numbers. And of course, look no further than oil prices at below $40 a barrel. Look at what's going on. Those of us who are working from our home offices instead of driving, that's really driving down fuel prices or keeping them low, and that's hurting the ethanol producers, even though corn prices, for example, are at a good level for the ethanol purchaser.
You know, as we talk about some of the other longer term factors that tend to go along with, current economic situations, like for instance, land prices. You asked about that and got an interesting response.
They've been below growth neutral for even several years, Clinton. I mean, now the farm income is down a lot more than farm land prices. So land prices have come down. They continue to move lower, but not what you'd expect given what's happening in agriculture commodity prices, given what we're seeing in agricultural income. Farmers are still, when the farmers look out, even though they seem a little pessimistic, they see a future and they continue to support at least reasonable prices. Now, agricultural rent payments, now those have come down a lot more, and we've seen a lot more movement lower for agricultural rents, yearly rents, but prices on land still higher than you might expect.
Do you expect land prices to continue to move lower? Is there a trend there of that over successive months?
They will, Clinton. They'll continue to move lower, but when we talk about those who lived through the 1980s, and I didn't live in this part of the country, the ag part of the country in the 1980s, but what happened there with the foreclosures and defaults, we're not going to see that. We're going to see prices, but the farmer entered this downturn stronger than in other previous downturns. The banker, the community bankers, and the farmers are working it out, restructuring loans, for example. 3/4 of the bankers told us they are restructuring loans, meaning their terms of payment are being extended outward in terms of time. So it's not nearly as negative as one might expect. Now, we do need to see a turnaround, no doubt about it, and we'll see that hopefully in terms of exports. And I keep talking a lot about exports, but that's where we need to see some action.
Where we see some action, maybe some optimism there. You did ask about delinquencies, and there was a pretty good number. Almost a quarter of rural bankers or bank CEOs expect those defaults to go up.
Well, that's correct. But when you look at what we economists call expected value, it's still only up 5 to 6%. Now that's an increase over 2019 bankruptcies. In 2019, those were higher. So we are moving upward in terms of bankruptcies, but not nearly what, again, those who lived through the 1980s, nothing like that. The bankers and the farmers are working it out, doing, I think, and what I see, at least now I'm sort of on their side. I just record what they tell me, and I speak before a lot of farmers and bankers, and it's not nearly as negative as some other industries. For example, leisure and hospitality,
sure,
that's being hammered.
You know, as you start to look out over the next quarters, the next couple of quarters, what do we see on the horizon here? Do we expect somewhat of a recovery, or is a lot of it going to be tied to what do we see in this whole export market as we've been discussing?
Well, in exports, and that's it, but that's tied to, are we going to get a vaccine?
Sure.
I mean, unfortunately, we're in the medical area, and boy, I'm lucky to be put on a Band-Aid properly, so I can't comment on that, but the vaccine's where we need to see the action, and at least the opening up of the economy, which we have seen, that was necessary, essential. Closing down the economy again, not something we need to see, but we need to see a vaccine, of course.
Dr. Ernie Goss, thank you so much for joining us on Farm Journal Live and sharing the insights on the Rural Mainstreet Index. We continue to track it each month. Really appreciate that. Thank you so much.
Thanks, Ben. Good to be with you.
Yeah, absolutely. Taking a look at how some of the major commodities are faring this year, given what's been going on with the COVID-19 outbreak. We showed you this graphic yesterday from John Newton of Farm Bureau. As you can see, rice has been far and away a winner on prices since the pandemic started, but it may not be just because of COVID-19. There are some other factors at play. Here to help us sort it out is Alvaro Duran-Morant. He's an assistant professor with the Department of Agriculture, Economics, and Agribusiness at the University of Arkansas. Alvaro, thank you so much for joining us. Talk a little bit about rice prices and where they stand and maybe what's been behind the catalyst here.
Yeah, well, thank you so much for having me today. Undoubtedly, the COVID pandemic has affected the rice market, but as you said, it has affected it in a different way. And actually, if we just look at prices, not only in the U.S. but globally, we can say that it has affected it positively on the price side of things. In the U.S., I think there are two main drivers. So in the U.S., we have to understand that the 2019 crop, basically that we harvested in August, September, and that we are still marketing, was a very short crop due to a very wet spring season in 2019 that affected planting. So that has driven U.S. prices up, together with, again, we were talking about exports before. So U.S. rice exports have been very good this year. Actually, they are above what we exported in the 2018 crop. So again, all that at the domestic level put pressure on prices. Plus, on top of that, of course, COVID came up, and large exporting countries such as Vietnam, India, Pakistan, they started implementing export bans out of fear, really, of how to cope with this pandemic. Just to make sure that you understand at the global level, we have plenty of rice to go around. I mean, we had a bumper crop in 2019. But again, fear from consumers and from exporting countries really put a lot of pressure on the international market price. So there was a combination of a short crop in the US, for sure, already pushing prices higher even before COVID happened. And then a global reaction that actually ended up pushing prices up, similar to what happened in 2007, 2008, when we had this, a large price spike in rice prices. So,
Yeah, it's interesting. We talk a lot about prices going up, but I guess the other side of that, yeah, prices were higher, but were U.S. producers able to take advantage of those over the last couple of months?
That's a good point, and most likely they didn't, because again, there's very little, for any practical reasons, there is no paddy rice to go around. Most of it was sold already. So again, the prices that we are seeing for the July contract, which is the last contract in this crop year, most likely very few farmers were able to take advantage of that, because most of the rice was sold way beforehand. So yeah.
So how does the outlook look for this year, as far as not only just conditions and getting the crop in and the quality of the crop, size of the crop, but also for prices moving forward throughout the rest of 2020?
Yeah. So on the production side of things, all rice has been planted. I mean, there is very little left to be planted, but from a practical point of view, we can say that we are finished with planting. It will be a larger crop, again, assuming that yields will be good, but the area increase across the U.S. around 22%, according to the latest USDA numbers. Most of that increase happened in the long grain segment of the market, which is really the rice planted in the Mid-South. So again, we are expecting, at least in the domestic market, to have a larger crop, and that will ease the pressure on prices. And we can see that, if you look at the September contract, the prices are around $12, which is roughly the prices that we saw last year. Again, now what happened in the remaining of the marketing year is again, as the previous guest suggested, it will depend on what happened with COVID, to be honest, right? So globally speaking, we see the latest WASDE report projects a record production this year, globally speaking. Also record global production, consumption, but production outpacing consumption, as it has happened over the last 10 years. So what happened with COVID will really dictate what will happen in the international rice market. Prices in the international market have been up in the last couple of months. They are kind of going back to normal again as these countries, as the exporting countries start opening their trade. But again, we are seeing kind of a second wave starting in China, and so it's really a risky, I would say, a highly risky environment. On the U.S. side, I have to also say that, again, rice is a very fuel-intensive crop because most of the rice, all the rice is irrigated. So again, COVID has had some benefits on the cost side of things. So it's not only the price that we have to look at. I think there will be a cost reduction when everything is said and done.
Absolutely. Well, I appreciate the insight on it. Rice isn't something that we talk a lot about, given the overall number of acres in the country, but boy, it's been interesting to watch here over the last couple of months, and really appreciate you sharing some of the insights on what's happening in the rice market. Thank you for joining us for Farm Journal Live today. Absolutely. Our very own Betsy Gibbons been reporting on this topic as well, and Betsy and others weighing in on this run-up in rice prices. Here's her story.
Clinton, the price bump is not just due to COVID-19. Yes, the pandemic is a factor, but the price bump is also due to good export demand and a short rice supply in 2019.
As you can see behind me, a lot of rice in Arkansas is now being put on for permanent flood.
DeWitt, Arkansas rice grower Kenneth Graves is out of the field after a wet and cooler spring. He usually grows medium grain rice, but he's growing long grain this year due to the market.
Some of it was slow to come up, and some of it looked pretty sad, but has rebounded well. Some of the later rice is looking fine.
Outside of the field, rice prices are seeing a boost.
Rice has been kind of the opposite of everything else, of all the other commodities so far, right? So when all the prices of the commodities went down, rice went up.
Take a look at this graphic of commodity prices since the start of COVID-19. While most commodities dropped, rice was well above the prices at the beginning of the year.
The July contract that right now is $17, I would say that is the highest I remember.
Duran Morant believes most analysts will agree the price spike reflects more of the tight U.S. supply situation with very little to no 2019 paddy rice for sale.
The very high prices that we are seeing in the market for the July contract is driven primarily by a short supply.
New crop contracts are much lower, roughly $12 a hundredweight. While there may be a shortage in the U.S., there is plenty of rice globally. That said, U.S. exports have increased by volume, especially to Latin American markets.
If we look at the cumulative exports up to April, which is the latest data I have available, exports of long-grain rice were up 17% relative to 2018.
Graves hopes prices will get even stronger if China buys.
Hopefully when that gets going, that will help a lot of farmers with price. They'll be getting more for the rice. China can eat the U.S. rice supply in 14 days, so needless to say, the price could get real sweet if it ever happens.
As harvest inches closer, Graves hopes for a good end to the growing season. Reporting for Ag Day, I'm Betsy Gibbon.
All right, thanks Betsy, and thank all of you for joining us for Farm Journal Live today. Of course, if you'd like to keep up with what's happening around the agricultural industry, you can do that by going over to agweb.com or visiting any number of our sites online or on social media. Again, thank you so much for spending a few moments of your day with us here at Farm Journal. We'll see you again tomorrow. Thanks for watching. It started as social distancing, self-isolation, and caring for loved ones. A time for agriculture to be proud, to be essential. Now, it's changing. While states start to reopen and jobs resume, out here, the clouds are building. The path is uncertain. It's not the first time, it won't be the last. But we'll farm on. This soil is soaked in generations of sweat, of reinvention, of grit. Farm on is a calling. It's a mantra, a mindset. When the horizon dims and things turn dark, we'll find the light. We may be doing this for you, but we're also doing it for them. 2020, now's the time to farm on.